Mingaraba, Charona Kasuyaba to Yadawandabate. So now we are talking about the basic of the finance. Today is number 2. So as I mentioned, I'm believing we can be a good businessman or lady if we can understand the finance. And financial statement is a key document to collect the necessary fund for the company operation. I explained in the last lesson, right? But from the point of view of the investors, it is very difficult to compare the investment opportunities in different countries. Why? Because different account standards are used to make the financial report in each country. So in order to recover that kind of the difficulty, IASB, it's not important, but it is an International Accounting Standard Board approved international accounting standard. It can be commonly used in the world. So it is called IFRS, International Financial Reporting Standards. So if your company use IFRS, then now it is easy to compare the investment opportunities in the different countries because we may use the same account standard. It is called IFRS. This is IFRS, this is IFRS, this is IFRS. Then maybe originally each financial report said NPAT, net profit after tax, is US dollar 100, 100, 100. But now if we use the same financial standard, IFRS, then we can compare these figures apple to apple. And maybe this NPAT is $100, but this NPAT may be $90 in IFRS, then another NPAT is $80 in IFRS. Then we can compare which is bigger based on the same standard. It becomes easier to compare for the international investment opportunity fairly. But if we are going to use this IFRS in your company or not, it is fully depends on your management of the company. Benefit of IFRS. Number 1, wider comparability of the investors. So from the point of view of the investors, we can compare easily because it is based on the international accounting standard. And number 2, efficient allocation of the capital. So again, this is from the point of view of the investors. It is easy to allocate the capital in several locations internationally. And number 3, lower cost of the capital. This is from the point of view of the company side. In order to collect the capital, we can use the same financial standard for the investors in United States or Japan or Singapore, right? So that's why cost of the preparation of the capital collection would be cheaper, right? So we can use the same financial statement to any investors in any country. That can be the also benefit of the company side. So as I told you, we can adopt IFRS or not. It fully depends on the management decision of your company. Maybe sometimes it is difficult to introduce IFRS because for the taxation rule in your country, including Myanmar, there is a requirement to submit the financial statement based on the Myanmar system. So that's why if we prepare financial document based on the IFRS, then it would be double work. Maybe we have to prepare the 2 financial documents and it may be the big trouble to your company. So if it is difficult to prepare the 2 financial document or IFRS financial document, then maybe another way to make some simple comparison is EBITDA. EBITDA means earning before interest, tax, depreciation, and amortization. So if we compare the earning before deducting the interest and the tax and the depreciation and amortization, then we can eliminate the factor which fully depends on the country. EBITDA is a cash flow earned in the core business. Why? because it is excluding the major cost which is different by countries, like interest, tax, and depreciation. Right? Okay, so this is the end of today's lesson. See you next time. Bye bye.